All right, so today was a day I was just a little bit overconfident, so I risked two to try to make a little bit more. So I tried to give the trade a bit more space to be flexible so that it could go down and then continue to rally up. However, I was wrong, and then also I wasn't paying much attention to the dollar, so I had the direction on the dollar wrong. From that, I entered to the wrong side on the QQQ. I entered to the buy side, and then it continued to just trail down, and hit my stop loss eventually. That's where I got closed out for a loss of $37. But let's analyze the trades today, and you can see that on the dollar, you had a rally up on the dollar. Let's get to the chart. So we had a rally up on the dollar, which would have translated to a move down on the QQQ, which is what I would have originally played. However, I was not paying a lot of attention to the charts, and then I had the wrong direction initially, and then that just ended up in me having a failing trade. So the top chart is the dollar, the DXY, and the bottom chart is the QQQ, right? So one thing I wanted to note is that while at 9:30, what I was seeing during the market open was that pre-market you have a lot of red candles, so it was looking quite bearish on the dollar, so that's bullish on the QQQ. And then I had these drawdowns here. So while these were forming, of course, there were solid candles while they were forming before they came back up and closed right here. And also on this one, you had a open here, it kind of pulling down, and then it kind of come up to the top and close. So what was happening there is that the market looked to me like it was breaking lower on the dollar, which kind of gave me, I had some bias, when you have bias and you just blindsided and you're thinking, okay, this must go in my direction. However, it did not, and I ended up being wrong with me getting taken out at around 10:55. So let me show you exactly where I entered and where I got closed out on the QQQ. Right, so at 9:30 is when I entered to the buy side, which was wrong, of course. 27625, 27624 was my exact entry. 27624. So let's go to there. 27624. So right around here. Come on. 27624. So right here was where I entered. And then I got closed out around 10:55. Around one of these bigger candles. Honestly, my stop loss was a bit too wide. It wasn't to my strategy, so I didn't like that at all. I didn't like that trade at all. So 10:55, and I got closed out at 27450, right? So right here is where I got closed out of the trade at my stop loss. So just reflecting on it, you can see where I went wrong. I mean, not monitoring the trade, not having the correct risk to reward, because if I had entered at 276.24, if I'm risking one to make three, or 3-to-1 risk reward, my ideal stop loss would have been 275.24, and that's where I should have been taken out. So if I had followed that, of course I would have been taken out very early, like within at least 30 minutes. 275.24. So within 30 or 40 minutes, I would have been taken out of the trade, yes. And that would have been better because I would have taken less losses than this, which will not work when I have a larger account. So I have to really be mindful of sticking to my system, right? And also, what I noted is that I could see that the dollar was wicking, right? And by wicking, I mean it had long wicks. It tended to like bounce off of this area. So also during the day, I was seeing it, and I'm like, no, it's not wicking. It's gonna break down. It's gonna break down. However, I was totally wrong. So I had some bias there, while the trade was playing out. And as you can see, it wicked here, and then it continued to rally. It had a wick here. So when I say a wick, I mean that's a strong area of support. That's a point where the sellers are able to try to push it down, but the buyers come and push it right back to the area where, right back close to our area where the candle opened, right? So we have a lot of bullish movement up until around 10:45. And why I like the dollar, why I like the dollar is that if you can spot the direction on the dollar, right? Doesn't matter if the market looks quite choppy, you can spot the direction on the dollar, and if you can spot the start of a trend on the dollar and you can spot the reversing on the dollar, that's an easy entry and exit for you right there, right? And why I wanted to point this out is that you can see 930 on the dollar, right? 930 on the dollar is at the bottom here, right? And where do you find the top on the dollar? You find the top on the dollar for today at around 10:45. So say you were to follow these candles on the QQQ, right? You would have opened at 9:30, right? And then you saw it weak, so you're saying, all right, I'm going bullish on the dollar until it begins to reverse, right? Or until it breaks below this level. So you go bullish on the dollar when you begin to see it reversing, right? You see it start to reverse. Say you see a big candle down and you say, okay, I'm going to take my profit at 1050. Let's look at 1050 on the QQQ. So 1050 on the QQQ would have been, come on, would have been right around here. So let's look at 1050 on the QQQ. Whenever it probably wicked, you would have taken it out. So let's see here. So 1050 on the QQQ would have gotten you to from 276 to 274.95, right? So you'd have risked, say, one, so you'd have risked 20 to make what? Around $40, if not a little bit less. But it would have almost been a sure trade or a safe trade. So that's why I like looking at the QQQ, because even looking at there, that's when you spot the bottom, right? If you spot the bottom here, you could go bullish on the QQQ from 1050. And let's look at how that would have played out. Yes, you'd have taken some drawdown. However, as you can see, let me see. This is 1050. You'd have taken some drawdown, yes, and you'd have to be able to hold through this. But as you can see from there, you had a lot of upside right until what's this? 245, right? So 245 is probably where the dollar found another bottom. So 245, 245, awesome. So 245 right around here is where you would have taken it out at a close bottom, right? So say you went for a buy from here, the top until where you kind of saw it reversing or kind of wicking. That would have been the equivalent to taking it from the 1050 candle right here and taking profits at this level, which is 245 or 250. So that's why I like looking at the dollar, because it's like a trend indicator, in my opinion, you know? Like the dollar can really signify a better trend to you than just looking at the raw QQQ chart. All in all, that was it for today. I mean, I don't like how the last trade played out for the Thursday, because I took a bit of a loss that I shouldn't have because I was biased and a bit overconfident. But that's what happens. It's all a learning lesson, and I'm just spending time on the charts every day to build that consistency and just build the skill set more and more, right? So I'm just getting used to the charts more and more, more and more, trying to build the consistency, trying to build the strategy, right? But it was a good day, and I hope that tomorrow will be much better and next week will be much better. Even though it it can still end up to be a profitable week depending on how tomorrow plays out. If it's a solid trend and I can ride it out to the end. If not, I'm gonna just take a simple loss and just call it square, call the week over, and let's hit the next week better. It was a good week, and I'm thanking you if you actually sat down and watched this to the end of the video. I know it's quite long, but I'm aiming to provide you some truth, some value, and some real trading journal entries from what I'm actually doing, right? And you can see the results, you see the profits, you see the loss, you see where I enter, you see where I exit, you see why I enter, I explain why I exit, all of that, all right? So I'll see you in the next video, and the edited video is coming out soon, so look out for that, all right? Bye bye.